Hey, Chicken Gang, I want to ask you, why do some people make so much wealth? Like me. If getting rich was that easy, everybody will be rich. My goal here is to help you guys make better financial decisions so you can be at a better place and in return help others who are less fortunate, and that's super cool. If you have invested in the stock market for the past few months and you thought to yourself, I shouldn't have invested in the stock market, and I hope this message reaches out to you. I took some time to compile this chart. The source is from GitHub, compiled by The Economist. My favorite burger from McDonald's in my 20s and 30s was a Big Mac. This is the price chart of Big Mac burgers from 1986 to year 2000. In 1986, one Big Mac cost $1.60, and over the years, prices have tripled, nearing 4 times. Seeing the bigger picture, when you were young, you were taught to save, to hold cash, save enough for retirement. If anyone followed that advice, most of you would be screwed. As you can see from the rise in Big Mac prices, a $200,000 to $300,000 savings in cash, buying power has effectively reduced to 50 over 1,000. The same amount of money buys you less stuff. I use Big Mac because McDonald's have restaurants all over the world and it's a good gauge for cost of living. Do you know that a Big Mac in Switzerland costs USD $7.30? I think it's due to the Swiss precision burger stacking. Anyway, so what has all of this got to do with you and the stock market? Do you think you can work hard, suck up to a boss, or if a boss yourself, sucking up to the customers all the way till you retire, saving enough money along the way? No, most of you will die halfway dealing with donkeys. I'm all ears if you have a solution to this. Tell me a method if you have figured out. Comment below. I do spend a lot of time reading comments for feedback. I really do hope you remember how much housing used to cost 20 to 30 years back. Imagine 20 years from now when you retire. At a certain point, it's not funny. So let's put some facts onto the table. Not rumors, not projections, just facts. Number 1, cash is dumb. Saving money till you retire is not going to work for 99% of people. Let's say you save a massive $10,000 per year for freaking 30 years slogging away. It's $300,000 compared to investing, and if you compound it, your starting capital at $10,000 with a loser returns of 10% a year over 30 years, that's $1.8 million. Do you prefer $1.8 million or $300,000? Number 2, if cash is dumb. Though the only alternative is to make money work for you, investing in stocks, real estate, and lately, crypto. Do you have a better plan? I'm all ears, man. 3, so let's say you finally wake up your dumb idea and decide to invest. You buy into stocks and the stocks drop, which it always does because stocks goes up and down and not only up. You feel sad and you thought to yourself, I should have timed the markets better. You should have done this, you should have done that. I get it. I know how it feels. So let's address this point. Point 3. For those who are new to investing, I hope you do know nobody can consistently predict the stock market. Many talk about Michael Burry, the famous call on his housing bubble. I'm willing to take a bet with you that I will continue to outperform him. Look, people like him are like David Einhorn. Once or twice relevant, most of the time, shit. 1 or 2 good calls out of the 100 calls and that shot to fame. I don't buy into this. Do look up Wikipedia on Michael Burry. Though it sounds simple in theory, it's so hard to do. DCA, dollar cost average. Do read this article. Even God couldn't beat dollar cost averaging. Not my first time showing you this article. To illustrate this point, does it matter if you bought stocks at the highs over here and later it drops like a rock here? Go back in time to 2018 and imagine the pain. Now take that pain and multiply it by 10 times. 1 time, 2 times, 3 times, 4 times. You get my point. If you bought at every of the highest point, this will be your average price. You love the business, you understand the company, you hold on. And oh my God, it tanked further. Now the pain, triple it. But you continue to hold and dollar cost average. Does it look stupid anymore? Yeah, hindsight, I should have bought. Hindsight, my donkey ass. Easy to say, when you are placed in that situation, your monkey brain takes over. So do you have a monkey brain? Why am I so calm? This is my projection. You've seen my evaluation models. You've seen many valuation models from other YouTubers like Governor of California, Mick Kevin, there's Tom Nash, there's Tesla Daily, there's Warren Relic, and of course, ARK Invest. You decide which suits you more. My price target of $4,000 per share, 2026 to 2028, it will be a bumpy ride up. If I massively screwed up and I got half right, it's still $2,000 per share. Means whatever money I put in now is going to quadruple. Now, sounds easy, but it is so hard to do. By the way, today is options expiry. I posted my options play on Twitter. Don't miss it out. I'll link it down below. So wrapping up this episode, I'll be around when times are good. We celebrate. I will also be around when times are bad, giving you the reminder that I'm still invested and nothing has changed, and we do what we need to do to hit our financial goals. We are in it together. To the moon and Mars we come. I hope this video helps. And as always, thank you for the like and invest safe.